Imagine this. Your portfolio's ballooning, Bitcoin's soaring past $100,000, and you're not even sweating over lost private keys or hacked wallets. How? Bitcoin ETFs. That's right, massive profits without touching a shred of crypto yourself. No tech wizardry, no sleepless nights. Just pure, passive gains from your comfy brokerage account. But here's the twist. Convenience comes at a cost. Fees nibbling your returns, no actual Bitcoin in your hands, Dealbreaker or Genius hack? Today, we're slicing through the hype of Bitcoin ETFs, like BlackRock's IBIT, to reveal if they're your fast track to riches or a cleverly disguised Wall Street trap. Stick around, this gets juicy. Bitcoin ETFs. The lazy investor's crypto cheat code. Let's cut the fluff. A Bitcoin ETF, exchange-traded fund, is your VIP pass to Bitcoin's wild price swings without owning the stuff. You buy shares in an ETF that tracks Bitcoin's value, not the coin itself. It's like betting on a racehorse without feeding it hay. The ETF holds the Bitcoin, you hold the shares. Price goes up, you win. Price crashes, you shrug. Simple, right? These beauties trade on stock exchanges. Think NYSE, NASDAQ. So you snag them through your brokerage like you would Amazon or Netflix stock. No crypto exchanges, no convoluted wallets. It's Bitcoin investing for people who'd rather nap than nerd out over blockchain. BlackRock's IBIT, the ETF titan you can't ignore. Enter the big kahuna. BlackRock's IBIT. Launched in 2023, this beast is backed by a $10 trillion financial juggernaut. Unlike older crypto funds playing with futures, IBIT's a spot ETF. It holds real Bitcoin, tracking its price tighter than a shadow. Fees? A measly 0.25% a year. Chump change next to some crypto platforms that'll bleed you dry with hidden costs. Plus, it's SEC regulated, so you're not praying a shady exchange doesn't vanish with your cash. IBIT's a fortress, safe, sleek, and stupidly easy to buy. But don't pop the champagne yet, there's a flip side to this shiny coin. The pros. Why ETFs are a passive profit rocket. Here's why Bitcoin ETFs are turning heads. Effortless access. Buying IBITs as simple as snagging a blue chip stock. Log in, click, done. No fumbling with crypto wallets or memorizing seed phrases. It's so easy, your grandma could do it. Liquidity that pops. ETFs trade all day on the stock market. Need to dump your shares at lunch? No problem. Try that with Bitcoin during a crash on some glitchy exchange. Good luck. Tax sanity. Gains and losses work like regular stocks. Your brokerage spits out a tidy form. The IRS stays off your back. Compare that to crypto trades. Every coffee bought with Bitcoin needs a spreadsheet. Pass. Portfolio power. Mix IBIT with stocks, bonds, whatever. Want 10% of your nest egg riding Bitcoin's wave without the hassle? ETFs slot in like a dream. It's a hands-off investor's paradise. Exposure to Bitcoin's insanity without the migraines. The cons. Where ETFs lose their luster, but don't get too cozy. ETFs have warts. Fees that creep. That 0.25% sounds tiny, but stack it over a decade, and it's a chunk of your profits gone. Own Bitcoin directly? No middleman skimming your gains, just a one-time fee to buy. Tracking hiccups. IBIT tries to match Bitcoin's price, but it's not perfect. Market quirks or management slip-ups mean a 10% Bitcoin spike might only net you 9.7%. Close, but not cigar. No real crypto. You're not holding Bitcoin. You're holding a promise. Can't spend it, can't send it, can't flex it. It's pure speculation, not the crypto revolution. Trust issues. If BlackRock or its custodians implode, unlikely, but not impossible, your investment's toast. With actual Bitcoin, you're the boss. With ETFs, you're betting on someone else's house. Convenience has a price tag, and it's not always cheap. Fitting ETFs into your money-making machine. So, should you jump on Bitcoin ETFs? Depends on your vibe. If you're a set it and forget it type, ETFs are gold. They're perfect for IRAs or 401ks where crypto's off limits, or if you just want Bitcoin's upside without the roller coaster drama. Already juggling stocks? Tossing IBIT into the mix is seamless, diversify and chill. But if you're a crypto cowboy, craving the rush of self-custody, dreaming of decentralized freedom, ETFs might feel like training wheels. You're swapping control for ease, and those fees could haunt you if you're in for the long haul. Hardcore hodlers might scoff. Here's the play. Blend it up. Stash some Bitcoin in a cold wallet for the full experience, bragging rights included. Then park some cash in IBIT for quick exits. Or go all in on ETFs if risk makes you queasy. It's your call, tweak it to fit your guts and goals. The real deal. Profits without the panic? Bitcoin ETFs like IBIT are a slick shortcut. Ride Bitcoin's chaos without wrestling the beast yourself. Convenience, liquidity, and a safety net make them tempting. But fees, tracking slips, and no actual crypto mean they're not flawless. If you're fine with the trade-offs, they're a slick way to stack cash without the stress. Just don't kid yourself. Bitcoin's a wild animal, ETF or not. The ride's never smooth. Do your homework, size up your appetite, and maybe you'll be the one smirking while the market flips.